Coin traders, what's going on? Thanks for joining me. Looking at GRT, the graph, 2 nice days of upside right now, and we did break a lot of resistance points. So do got a lot to talk about in regards to this chart, especially since after this big explosive move at the beginning of February, ultimately tapered off, a little bit of consolidation, and then we did have our major break, and then now found our oversold bounce. So now we're going to talk about some targets, especially now that we are back in a bullish type pattern, breaking a lot of the previous trend lines. So if you haven't done so yet and you do like this kind of content, would appreciate you hitting the like and subscribe button. Definitely helps out the channel. And so first, let's go ahead and talk about this daily chart setup because a lot is actually going on. Now, I should have actually zoomed out a little bit more because we did have a very nice support level along these exponential moving averages until finally breaking it back in the 8th of March. But we did see a complete reclaim by the bulls recently, now breaking bullish and closing bullish on top of all these exponential moving averages. But so now we're actually kind of at an interesting level because we do have 2 major lines for support and resistance based on the close for these. So you can see just marked the closing level of support initially, which is now resistance, and then also the closing level of resistance, which hopefully should now be support, because if we actually look at the current setup, we actually closed on top of the lower line and actually now in the current daily candle are sitting in between this overall zone. So this is going to be a pretty big point. So once again, just to narrate, you can see big level of closing support, which is where we draw this upper line from. And then also looking right a little bit more, big level of closing resistance once we actually broke and had the bearish close below those lines. So this was our bearish level that we did end up closing below. So that's kind of what more or less forms this big zone that we do need to get through. So the fact that we're actually seeing prices getting stuck up at it right now is a pretty good sign because, like we always mention, we do need to see that consolidation because we do want to see consolidation on the upside because that typically does mean support when we do see our downside test. So especially now that we have gotten it as confirmation based on resistance and previous support, we're going to look to continue that upside since direction of momentum is now to the upside and also back on top of the exponential moving averages. So now can't talk about this chart with actually diving into a lot of the fundamentals that have been going on. So essentially what we have had happen is a massive rally on the crypto space. And essentially what happens is that a lot of the money that has been in the banking sector is starting to flow into some other assets like big tech companies such as Apple and Amazon, as well as a lot of precious metals. So we have gold, silver, and then also cryptocurrency, most notably Bitcoin, which is why we had such a big, massive day for Bitcoin when the altcoins do still have a lot to catch up. But we do know that typically what happens is Bitcoin does find the exposure first, since it is kind of like the gateway and entry point to crypto for most people and most industries, and especially most institutions as well. So for long-term growth, great sign, and we do know that a lot of money ends up flowing into the altcoins from there, but nonetheless, I digress, because we are still going to have to be extremely mindful what happens, and obviously this banking collapse is pretty much the reason why we do have crypto in the first place, so I do think we could still be getting a lot of attention for cryptocurrencies here in the coming future, especially if we do expect a little bit of trickle effect on a lot of the defaults and closures of a lot of these other banks. Now, while we're still in this daily chart, if we actually pull up the technicals, you can see GRT was one of the only ones that actually did not get oversold on the daily. But if we look at the level that we've seen for GRT for this daily RSI, we can see that we actually haven't seen it since the middle of December, right when we did find our bottom. So obviously previously before that sign as well. So every single time we have gone around this level, a little bit of upside has ensued. So especially after having such a big pullback, we know that we are going to be expecting a little bit more of that rally. So let's go ahead and look at a Fibonacci retracement based on the low at the start of the year up to the trend high in the first week of February when we did have our big, massive blow off top rally. So you can see 6.1 or the 61.8 at 12.18 dropped below that. So about halfway in between the 78.6 and the 61.8. So very nice target to the downside, bouncing off and finding that close. So being able to reclaim, especially above the 50% retracement, we would still be expecting a little bit more of a run and rally. So even if we do run, I would expect a top coming in at about the 38.2, which currently is sitting at 16.4 cents. So from current price levels, that would put the price of GRT, the graph token, at about a 13% growth from current price levels, which is still a very nice upside move. Now let's go ahead and shift over to the weekly because we did just close the weekly here yesterday. So big, nice pullback after finding our high below the 50-period exponential moving average, but retracing, still finding our level of closing support on top of the 12 and 26, which the 12 has now crossed above the 26. So a little bit more of that sign that we're going to get these EMAs to start to tighten. So it is going to be imperative that we do start to maintain a lot more of that support for these EMAs. Otherwise, we do risk continuing momentum to the downside, which of course bulls do not want to see right now. And obviously for a start of a bull cycle, definitely don't want to see that as well. So flipping over to the 4-hour right now, like we mentioned, a lot of resistance. But if we do zoom into the current setup right now, looking at inside bars forming, and let's actually expand this a little bit so you can see inside bars right now. So essentially, to reiterate, what that means is once we have our bar, we're going to have a high and a low price range. So inside bars is when the follow-on candle has its price ranges inside the ranges of the previous candle. So you can see all three of these candles completely fit inside the previous candle, and that's a very good consolidation and continuation pattern, which is why we do look for inside bars so often. So usually we expect the direction of breakout to be whatever level breaks first. So if we do see the price level break above the previous range, then that is going to pretty much hint at a bullish continuation and move. Otherwise, if we do see prices slip downside below the previous range, that's going to be a continuation for the bears to the downside. Good news is that still looking at this 4-hour, you can see, especially zooming out on this pullback and retracement, we were comfortably sitting below all these exponential moving averages. So the fact that now we are on top, going to be looking at making these exponential moving averages become a very nice support level on this retracement to the downside. So if we talk about supports now to the downside, if we do get a bearish correction, we would be looking at a very nice support. Well, several big ones, but you can see a big level of closing support. Come on. That does come in right at 13.78. So let's go ahead and look at the map. Previous level of resistance, found it as support, big support, big support, big support. So we know that, especially right here, resistance as well. So we know that on a downside move, that's going to be a very big support point. Probably either before consolidating and continuing on, or being able to break that support and then seeing further slippage to the downside if we can't get continuation from a lot of this news coming out of the banking sector right now. RSI pulled up for the 4-hour. We are overextended, so we do need to know that we are going to be looking for a little bit of retracement on that. Last time we have seen levels for the RSI at this point was back on our initial relief oversold bounce in the middle of February. So about the same levels finally pulled back. So you can see, didn't really get a lot of pullback, consolidated a little bit, and then ultimately saw some more slippage. So that could also be what's in line for this overall chart. But one of the things that I do want to talk about is just how we have broken a big downtrend resistance line. So if we look at this overall pattern, then you can see that after finding our peak, let's go ahead and get the drawing tools, a little bit of a bounce pulling back, finding resistance. And on some of the longer term charts as well, for example, like the daily, we can actually readjust this to make a little bit more touch points. But let's stick with the 4-hour for now because we still have plenty of data to align with this. So big point of resistance. And then even on this initial move, you can see resistance before rejecting, finding that nice bull break. So because we are above this downtrend resistance, that's still a very nice, good sign as well for the bulls. So even in the event of a retracement down to these exponential moving averages, also going to be looking at this nice downtrend line to find support on. So that is what we're going to anticipate if we do actually see bears take control and find slippage down to about that 13.5-cent target or so. Realistically, the 14-cent target's going to be pretty big as well. So the 14 all the way down to about 13.5 is going to be an extremely supportive zone, especially since we had a very nice bullish candle break and completely smash through this big zone. And even if we pull up volume, you can see that there's not really that much significant on this overall move coming from the recent trend high here where we did top out at a high of 23.20. But what's significant is that on this recent move, you can see this 4-hour blocks. Very nice upside volume to confirm that a lot of that upside move. So continuation would be great, but obviously if we do get bear movement, we do still have plenty of levels of support, consolidation, and then realistically probably being on our way again in that instance, just since we have this huge indication of being on top of a lot of these resistive levels. So for example, if we do flip over to the 15-minute now, you can see a little bit more of this consolidation pattern playing out. If we do get continuation, typically what we look for in a target is going to be the length of the stem prior to breaking out. So effectively, that could put a very nice price target right around the upper 15, or we'll just call it about 16 cents. So if we want to zoom out and actually take a look at this in terms of the overall pattern, then you can see that a very nice price point indeed, because it would align pretty well with where we did find a lot of closing resistance over here. So that is going to be one of our first targets and pretty much a good technical target based on the consolidation pattern. To the upside above that would be about 18, and then right above that would be about 1850 up to about 1865. So plenty of resistance going to be found between 18 and 1850 all the way up to 1865. But hopefully in that instance, if we do rally that much, then we would be finding nice support on top of the overall 16 level that hopefully we can get up to this next rally and movement. So current prices to that level would be a nice gain of about 10%. And then up to the other level of 18 would be 24, all the way up to about 18.5, 18.65 would be about 29% gain. So plenty of great gain opportunities still left. Obviously, looking at a downside, though, if we do want to test and make a new daily lower low, that would be a pretty significant pullback and retracement, about 27%. So obviously would be plenty of slippage. So if you are playing a little bit more of a longer term, not necessarily the best entry in terms of a risk reward playout, but if you are a longer term, it probably doesn't matter too much if you're planning on holding for a while. But nonetheless, I digress. Those are our current targets and pretty much what we're going to be expecting. On the 1 hour chart right now, finding support on the 12 period EMA, but we could have slippage, which would actually intersect 26, which is sitting right nicely at that 14-cent level that we talked about. So if we do get a little bit of slippage, that's pretty much going to be the scenario I picture playing out. Kind of like what we experienced earlier in the day. We did get stuck up a little bit, bounced down to the exponential moving average, and then rallied up once again. So that could be another pattern, pulling back and then finding the next leg to the upside for that target. Obviously, that is just one scenario, so no guarantee, but part of the thing that we talk about for technical analysis is talking about possibilities and probabilities along with risk management. And as a matter of fact, yesterday on Twitter, I actually made a tweet talking about technical analysis being those exact things as well. So if you do want to find more advice like this regularly, definitely drop me a follow over on Twitter at @coin_trades is the handle. Looking forward to chatting with everyone over there. On the 1 hour chart here, we are a little bit overextended, and the thing is that we are finding lower highs on this RSI, so a downtrend on RSI, yet uptrend in overall price action. So we do know that some weakening prices and momentum is going to happen soon, so that could be another reason why we're going to be expecting a little bit of that slippage to the downside, but that's okay too. So overall, I think after a big, nice, massive rally day for the crypto bulls, we do still need a little bit of period of cooling down. And I think that's probably what we're going to see over the coming day. And so might get a little bit of slippage, like we said, to test some lower supports because we are overextended on the shorter time frame charts, but nothing major to be worrying about overall. And of course, would love to hear everyone's thoughts and comments down in the comment sections down below. Because with that, that actually is going to go ahead and wrap up the show for today on GRT, the graph token. If you did enjoy the show, would definitely appreciate you hitting the thumbs up, like, and subscribe button if you haven't done so just yet. Do appreciate all the continuous love and support. As always, it does mean so much. Stay safe, take care, everyone, and I will catch you back in the next video.